Hello everyone and welcome to the Nifty 50 weekly technical update. Last week we mentioned that there was a counter move happening in the market. The price has already broken out of the immediate resistance. So the next resistance level could be at the upper band of this channel or within this supply zone. We observed that the price faced resistance in that zone. Looking ahead to the upcoming days, if we check the weekly chart, we can see a pin bar candles has formed at the resistance level. Upon closer inspection, it appears to represent liquidity hunting as the price swept through liquidity. Previously, we noted a breakdown below the immediate swing low, indicating that the trend is downward in the short term. This is a sign of a correction. Here we have a support zone. If this support doesn't hold, it could lead to the formation of a new lower low. This is a high possibility that price might decline further towards the nearest demand zone, which is around 22,000 to 21,000. Therefore, the price may return to that area. Currently, the chart conditions are showing that the price is trying to find support at the moving averages. We need to monitor whether this support can hold, otherwise the price may decline again. If we analyze the Bollinger Bands, RSI and MACD indicators, we notice that the MACD histogram is turning negative. The price is also facing resistance at the upper band of the Bollinger Bands, suggesting it may come back down to the middle band. Additionally, if we check the Ichimoku indicator, we see that the price has encountered resistance at the cloud. As we mentioned last week, in summary, our analysis indicates potential price movement in the upcoming days with support located at this area. Thank you for watching. Stay tuned. Welcome to the weekly technical update. Last week we indicated that we are observing a counter movement in price. We noted that price would encounter resistance at a specific trend line or at the next resistance zone, which is a strong supply zone. The price has already broken above the trend line with a gap up. However, it still faces resistance at the supply zone. Upon closer inspection, it's clear that is an instance of liquidity hunting as the price swept through liquidity. Now the price is attempting to find support at the trend line or within the swing Fibonacci golden zone. Over the upcoming days, we can anticipate price action to unfold in a particular way. If the price cannot sustain its position here, we may observe a new lower low. When reviewing the weekly chart and recalling our previous update, we discussed the ongoing downward momentum. The candle formation, a pin bar, indicates a potential reversal, with the price being rejected at the upper band of the channel, confirming a clear downtrend. The anticipated price action is expected to follow this trend. According to the weekly chart, the possible support zone is in this area. If the price fails to gain support here, it will likely move toward the demand zone in the following area. As mentioned last week, analyzing the daily chart, again the price is attempting to find support at the moving averages, having already been rejected from this channel. If the price movement is expected to move lower, especially since it has broken down below important swing lows, which is evident. If this support doesn't hold, the price could drop further. The ultimate demand zone lies here, and it's highly probable that the price will test this area. Reviewing other indicators, the price has already encountered resistance at the upper band of the Bollinger Bands and may soon approach the middle band. The MACD histogram is showing negative momentum. The price faced resistance at the Ichimoku cloud, as we mentioned last week. To summarize, we anticipate that the price action in the coming days to align with the support levels mentioned. If we see a breakdown of this support, the price will likely test the demand zone in the specified area. Thank you for watching. Stay tuned. Welcome to the S&P 500 weekly technical update. Last week we discussed the breakout from the previous price channel. The next resistance zone is in the area where the price has already encountered resistance and experienced a sharp decline. The latest area of interest or demand zone is situated here, and the price may return to this level. We previously highlighted that the most important demand zone is this area. The price is expected to return, and it will take some time for a reversal to occur. If we examine the weekly chart, we can see that the price has broken down from the range, creating a new swing low. Therefore, the new support zone according to the weekly chart is located here. In the daily chart, the price has also broken below the moving averages, indicating a counter trend movement. When we apply the trend based Fibonacci tool, the next support zone is around this area. Looking at the daily chart in relation to the Bollinger Bands RSI and MACD, we see that the price has already broken below the midband of the Bollinger Bands. This indicates that the immediate support zone is here. Additionally, in the Ichimoku analysis, the price has broken down throughout all components. A strong downtrend, we might be on the verge of significant market crash soon. If the price closes below this area on the daily chart, we will likely see that crash occur. In summary, the upcoming days we will see price action around this sensitive area of 5,400 to 5,300. If a breakdown occurs in the daily chart, we could witness a crash in the S&P 500. Please exercise caution in this area. Thank you for watching and stay tuned for more updates.